Palantir investors have recently received extremely encouraging news from Wall Street, and the development is turning heads across the investment world. While some market participants remain hesitant to buy shares due to what appears to be an expensive valuation, ignoring this company could ultimately prove to be a very costly mistake. Palantir has been one of the most explosive growth stories in the technology sector over the past several years. To understand the magnitude of the company's performance, it is helpful to look at the longer-term numbers. Over the past 3 years, Palantir has delivered stock price gains of approximately 1,730%. That level of appreciation places the company among the strongest performing technology stocks during that time frame, yet this impressive rise has come alongside repeated and sometimes dramatic pullbacks. During the same 3-year stretch, Palantir's share price has declined by at least 20% on 10 different occasions. These sharp drops illustrate just how volatile the stock can be even during periods of overall upward momentum. Volatility of this magnitude often shakes out short-term investors and traders who are not prepared for the emotional roller coaster that comes with owning high-growth technology stocks. The story becomes even more dramatic when examining the period between early 2021 and early 2023. During those 2 years, Palantir's stock price plunged by more than 80% from its previous highs. That kind of drawdown would test the patience and conviction of nearly any investor. Many shareholders exited their positions during this period, believing the company's best days were behind it. However, the stock eventually staged a powerful comeback as the company's underlying business continued to strengthen. Palantir's leadership in data analytics and artificial intelligence positioned it perfectly to benefit from the explosive global demand for advanced data processing and machine learning capabilities. As artificial intelligence adoption began accelerating across industries, investors once again started recognizing the enormous opportunity ahead for companies operating in this space. Despite the company's remarkable recovery and strong financial performance, one issue still generates debate among investors and analysts alike. Palantir's valuation remains extremely high when compared with many other publicly traded companies. At the time of this discussion, Palantir shares trade at approximately 241 times earnings. These figures indicate that investors are paying a very large premium in anticipation of significant future growth. Normally, valuations of this magnitude might cause analysts to recommend caution, yet not everyone on Wall Street believes the price is unjustified. In fact, one prominent analyst has recently made a very bold call regarding the company's future. An analyst at Citigroup recently reaffirmed his buy rating on Palantir while significantly increasing his price target for the stock. Radke raised his forecast to $260 per share, which currently represents the highest target among analysts covering the company. When comparing that target to Thursday's closing price, the forecast suggests potential upside of roughly 70% for investors if the stock eventually reaches that level. Such a bullish prediction naturally attracted attention from investors and market commentators. Radke's optimism is not based on speculation alone. The analyst pointed directly to Palantir's powerful financial performance and accelerating growth trajectory as the foundation for his positive outlook. According to his analysis, the company is demonstrating one of the most impressive growth profiles currently visible within the enterprise software industry. Radke explained that the revisions in Palantir's growth expectations represent some of the strongest improvements analysts have observed within large-scale enterprise software businesses. He further emphasized that Palantir's momentum increasingly stands out in an environment where many software companies are struggling to maintain high growth rates. In other words, while numerous technology companies are experiencing slower expansion after the rapid growth period that occurred earlier in the decade, Palantir appears to be moving in the opposite direction. The company's growth is accelerating rather than slowing. To better understand why analysts are becoming more optimistic, it is important to examine Palantir's most recent financial performance in greater detail. In Q4, the company reported revenue growth of 70% year over year. Growth at this level is impressive for any company, but it becomes even more notable considering Palantir's already large revenue base. Yet the overall revenue figure only tells part of the story. When examining specific segments of the business, the growth appears even more remarkable. One of the most important divisions within Palantir is its United States commercial segment. This segment includes businesses and private organizations within the United States that use Palantir's technology platforms to analyze complex data sets and improve decision-making. making. Within this division lies one of the company's most significant technological offerings, the Artificial Intelligence Platform. The Artificial Intelligence Platform provides organizations with advanced tools for deploying machine learning models, managing massive data flows, and integrating artificial intelligence capabilities directly into their operations. Demand for the Artificial Intelligence Platform has surged rapidly. In Q4, revenue from the United States commercial segment grew by an astonishing 137% year over year. On a sequential basis, meaning compared with the previous quarter, revenue increased 28%. This explosive growth allowed the United States commercial business to represent 36% of Palantir's total revenue. That share has been increasing steadily as more companies adopt artificial intelligence-driven solutions. Palantir's platforms allow these agencies to process that information quickly and extract meaningful insights that would otherwise remain hidden within massive volumes of data. Another important indicator of the company's long-term growth potential can be found in a financial metric known as remaining performance obligation. Remaining performance obligation refers to the value of contracts that have already been signed but have not yet been recognized as revenue. In other words, it represents business that the company has already secured but will only record as revenue in future reporting periods as the services are delivered. Palantir's remaining performance obligation increased dramatically in recent months. The figure surged 143% to reach $4.2 billion. Such a massive increase signals that customers are committing to long-term contracts with the company. Perhaps even more impressive is the pace at which these commitments are growing. During Q4 alone, Palantir added approximately $1.6 billion to its remaining performance obligation. This backlog of signed agreements provides a powerful foundation for future growth. Because the revenue is already contractually committed, the company has strong visibility into a significant portion of its future financial performance. Looking forward, Palantir's management team has also provided a highly optimistic outlook for the company's financial future. The leadership team is forecasting continued rapid expansion throughout the coming years. For 2026, management is guiding for full-year revenue growth of approximately 60%. If the company achieves that target, annual revenue would reach roughly $7.190 billion. The United States commercial segment is expected to remain a major driver of that expansion. Management anticipates that revenue from this division will grow by at least 115%, reaching around $3.140 billion. These projections highlight the enormous opportunity that artificial intelligence adoption represents for the company. Businesses across nearly every industry are currently searching for ways to incorporate artificial intelligence into their operations. Palantir's platforms are designed precisely for that purpose. However, investors should remain aware that the stock's volatility is unlikely to disappear. High-growth technology companies often experience dramatic price swings as investor sentiment shifts between optimism and caution. For individuals who prefer stable investments with minimal fluctuations, Palantir may not be an ideal choice. The stock's history demonstrates that large drawdowns can occur even during periods of strong long-term growth. On the other hand, investors with a high tolerance for risk may view that volatility as part of the opportunity. Stocks capable of delivering extraordinary returns often experience dramatic swings along the way. Several major global trends could support Palantir's continued expansion over the coming years. One of the most significant is the rapid worldwide adoption of artificial intelligence technologies. Organizations are increasingly recognizing that data-driven decision-making provides a major competitive advantage. At the same time, governments around the world are investing heavily in defense modernization. Advanced data analysis tools, predictive modeling systems, and artificial intelligence-driven intelligence platforms are becoming essential components of modern national security strategies. Palantir operates directly at the intersection of these two powerful trends. The company provides software platforms that help both corporations and government agencies transform enormous datasets into actionable insights. For investors who believe in the long-term potential of these technological shifts but remain concerned about the company's valuation, there are several strategies that can reduce risk while still gaining exposure. One approach involves starting with a relatively small position in the stock. Purchasing a modest number of shares allows investors to participate in the company's potential upside without committing a large portion of their investment portfolio. Another widely used strategy is dollar cost averaging. This method involves buying shares gradually over time rather than investing a large sum all at once. By spreading purchases across multiple time periods, investors automatically buy fewer shares when prices are high and more shares when prices decline. Over long periods, this strategy can help reduce the impact of short-term market fluctuations and emotional decision-making. When evaluating the overall picture, Palantir presents an interesting combination of extremely rapid growth, cutting-edge technology, and significant volatility. The company operates within industries that are likely to expand dramatically over the coming decades. Artificial intelligence continues transforming how organizations analyze data, manage operations, and develop strategic plans. Companies that provide the foundational infrastructure for these technologies could potentially experience enormous long-term growth. Palantir appears to be positioning itself as one of the leading players within this evolving ecosystem. Its platforms are already deeply embedded within many government agencies and corporate organizations. As adoption expands and new customers sign long-term contracts, the company's revenue base could continue growing at an impressive pace. For investors who can tolerate the volatility and who believe in the long-term growth of artificial intelligence and advanced data analytics, Palantir may represent a compelling opportunity despite its premium valuation. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.